Hi traders, and welcome to the daily recap show for Thursday the 10th of February, starting with the FTSE. We said it was bullish and making new post-Covid highs, and if we could break above 7664 to 73, then the next resistance was higher at 7711 to 7728. However, we said if we saw sustained breaks below 7627 to 37, we could look to buy from lower support zones, which could provide an opportunity for longs. However, 7587 to 7595 and 7497 to 7508 were the strongest zones. So let's go and have a look and see what happened in the markets. Okay, so initially you can see that we pushed up, and we pushed up into this 76.64 to 73 zone, but we rejected it straight away with a really strong impulsive candle. So that showed that it was a bit of a false break here and that we was rejecting that zone. And then price was fairly choppy for the rest of the day and rest of the morning. We saw some chop here and then a push down. Didn't quite reach that support zone that we mentioned in the report of 27 to 37. And then we pushed back higher into this 76.64 to 73 zone, which again rejected. We then had some inflationary figures out in the US, which pushed us down into this 76.27 to 37 zone. And we actually got a really nice reversal pattern there. Again, we're taking out the liquidity, taking out the low of that zone, and then putting a reversal to push higher. So that was a really nice trade just there. You can see we did hold the resistance up here as this zone as resistance, but then come back down and held the zone of support again before really pushing higher. We did get a break above this was 76.64 to 73 zone here. It's not too clean, it's a little bit corrective in nature. We then did hold it on the retest, however, just after into the US session, we got this really strong impulsive push back down, suggesting that that is a false break at the moment. So we'll have to assess again in the morning in our pre-market reports what the market is doing, but at the moment that is still holding as resistance. So that's the FTSE now. Let's go and take a look at the DAX. So with the DAX, it was still weak, but it was showing signs of retaking the bullish tones. And we said if we could gain acceptance above that 575 to 600 resistance, we could see moves higher. But if we held below 15,575 to 600 and then see acceptance below 15,460 to 480, we could see a move back towards support at 15,330 to 350. So let's go and take a look and see what the DAX done today. So on the DAX today, we had a really nice, we had an initial push up into this sort of 575-600 resistance zone, and we got a beautiful reversal just here, which was the catalyst for the next move down. You can see the rejection was very impulsive, moved down, briefly held in this this zone here. It's a bit more of an advanced concept because you'd seen that false break pattern, and from there you're expecting to move down a little bit lower. We then got a corrective pattern here, which you could then look to take a breakdown of. Now, if you're taking a breakdown of that as a bit of a breakout pattern below the zone, this trade probably would have lost you. Maybe able to have got it risk-free by managing the trade, but that may have been a loser if you took like a bit of a breakout pattern there to target the zone below, just because we've got such a strong rejection off of that zone. However, the better trade, as always, is the trade from the main resistance zone. And you got a beautiful reversal pattern there, which could have got some really nice risk to reward on that as well. We did retest it later on until, again, just when that inflationary news came out in the US, we got a really strong push down. And that did actually cause a brief dip below this 460 to 480 zone. Now, again, if you wanted to short this as a bit of a breakout pattern whereby you've got the impulsive move down, and then you've got this bit of a range developed at the bottom, and then you took a break of that, that would have been an absolutely fine trade. Again, overall this may have been a loser, but I would have liked, there's certainly enough here whereby you could have managed that trade to come out for a break even, so you could have reduced your risk on a trade to make that a break even trade. We then got that really strong impulsive push back above the zone of support that we had mentioned in the report. That therefore suggests it's a false break, and you could then look to trade this zone as support, but we never actually got back there in the session. So that's the DAX. I hope you found this useful, and I'll speak to you again later. Cheers.